Well, hello, traders and investors. I'm Ellie Little, and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective, and that means each night we ask ourselves what happened today, and what does it tell us about the coming ones. We use the neoclassical model to do that, looking at supply and demand on the charts. Do it 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel LA Little. If you want to subscribe and you hadn't, you can reach up in the right-hand corner. Do so anytime I push public content. You'll get a notification. As far as what happened, let's look at the numbers here. Pretty red, right? No big losses, just slightly red. A little bit of a pullback. S&P was actually up slightly. Oil spikes again. We're going to look at what's happening there. Gold and silver down again. Silver down 2.5%. Gold loses another percent. That's a pretty big drop this week. Remember, we lost the. That's probably. I'm trying to remember back. We're pushing 3% at this point. 2.5%, 3%. So a huge drop in those metals. Overseas down in Europe. Nothing big, but down. Dollar pushes higher, and we're going to start with the dollar. So let's pop in here to the charts, and we got the dollar up, the daily chart. Dollar pops over. Now, the dollar has been trying to work its way back up in the range, and there's kind of 2 ranges going on. We can see that more clearly here from the weekly when we look at the weekly time frame. And when I say there's 2 ranges, you've got this big bar still back here, right? It's kind of a dividing line, if you will. The area below it and the area above it is reasonably equidistant, right, in terms of size. That's the dividing line. And if you look at what's happening here, right, the dollar is coming into that zone again. And as it comes into that zone right here, that becomes the critical point, right, where buyers either step up and take this back into the top range, or they give it up and we go drifting back down. Now, as the dollar does this, you can think about the timing, right, with the employment number tomorrow. And many times what you see is this type of action, right, where they'll push it right to the point where they can break it out in case those numbers end up stronger than expected. The idea that the Fed will tighten, that gives the idea that the dollar should go higher. Key points right there. It's coming right into it. It's right around 25.10. Closed right at 25.01, I believe, 2,500 or $25 on the UUP. And so you're right underneath it. I'm trying to get the number, 25.06, right? So you're within a small percentage of hitting that number and seeing if you can get over and go up after a swing point high. If the dollar starts to break out and push into that top range, there's going to be some effects from it. In particular, we're going to see the yen probably continue down. You're going to see the euro continue down. So then you're going to see better equity prices in the European theater and in the Japanese theater, and you're going to see more difficulty in China because the Chinese are pegged to the dollar. If the dollar breaks back lower, then you see the money go back to China, right? And it's this yin-yang that we've been doing for a very long time. It's just that now we're getting to a point where a decision has to be made by those who trade in size. The other thing that's happening is the oil market. And if we look at the oil market, you can see here that this market is actually starting to make a move back to these swing point highs. There's 2 swing point highs here. It's almost to them. They're around 50.96. So you're within 1% of overtaking that. I'm on the weekly view here, so we're doing a weekly view of the oil market. You just had about a 10% run to the top side here, and this really is an ABCD structure that's taking place, and that structure takes it over this top. So at this point, question is it going to break out, do some short covering, right, and then retrace back into this? And I suspect that's what's going to happen. I've been talking about that for a while. I've been talking about the need to have exposure in this area. And, if you haven't caught the show, I even talked about a couple days ago that, or maybe it was last night, I talked about the oil market here and I've talked about it sooner back here. There was an article back here about it as well. This market has been beaten down, right? If you pull this to a monthly, look how much this market has gone down. We've traded from highs of up here over 90, and we traded all the way down to 25. That's a huge move to the downside. And so this move that we just looked at on the weekly, if you look at it here on the monthly chart, you also have an ABCD structure taking place on the monthly that's about to break. That's going to take it back to these highs. And so oil could make another $10, $12 move before this is over on this time frame, on the monthly time frame. Oil is a place you need to be looking if you're not. If you're thinking about something longer term. Let's go to the indexes because tomorrow you got the big numbers and we'll see how this market wants to behave. So far, I've been saying for a very long period of time here that what you're going to see with this market, or at least what you are seeing with this market, is you've got an upward bias inside of a range. The range is off this prior swing point low. That's a bearish retest regenerate. It coincides with the breakdown bars high. That becomes a very difficult area to get over and stay over. We got over it once and we came right back into it afterwards, and we've been dealing with that ever since. That area continues to see long tails. I've talked about this as well. One after another. Today was another one. There's a tail here. You can go back to this one. You had one back here. These long tails tell you that by the end of the day, the control has moved or has shifted. And typically, that's what it's telling you, that the control is shifted to those who are buyers. And so today definitely was. It was a hammer reversal. This is setting up to go tack this high again and try to get over it. If it does, it's going to go after those swing point highs. Now, why do we think that's probably going to be the case? Well, the reason we think that is because you've already done it elsewhere. In other words, when we broke down here, we broke this swing point low. By breaking that swing point low, we set up a bearish retest and regenerate. In other words, when you come back to that area, you should expect it to try to push back down. Didn't happen, just kept going up. Matter of fact, it got over the swing point highs again on the way up, and now you're consolidating up here in this higher range. That wants to continue higher. The NDX is set up the same way. The Russell's not as strong, but the Russell is actually doing the same sort of thing. Here's the Russell chart. It also had a bearish retest and regenerate, and it regenerated higher, made a new high, pulled back. Now, it didn't hold this, which told us, okay, we're probably going to range trade, and that is what we're doing. So far, it's doing a pretty good job of holding the that really is, I shouldn't even say that because that one really doesn't count at this point. It was really this one. And so this is range trading as well. The markets in general want to go up. Whether tomorrow is the day that they get, a reason to go up, maybe the employment number is weaker than we expect, maybe the dollar goes down, maybe that says, hey, the Fed's not going to raise rates, all of a sudden money pours back into the market. You can think of a lot of things, and I'm sure all the writers out there will think of something whenever it does whatever it's going to do. But folks, it's supply and demand. It's are you going to get new buyers at higher highs or at lower lows? You have ranges that have set up. If you get over this and you stay over it, you're going to see money come in, and you're going to see those that have been short get out. It's going to push it higher. If you break down underneath, you're going to see the money leave, and you're going to see those that want to be short get short, and you're going to try to drive it down to the lows. That's how a market finds price. That's price discovery. It happens on this time frame. It happens on every time frame you look at, whether you're looking at milliseconds and high-frequency trading, or whether you're looking here on a daily chart, or whether you really stretch it out and go to a monthly chart. It's all the same. It happens everywhere. That's how markets operate. And if you've got a model that deals with that, which is what the neoclassical model does, then you can look at those tests and you can understand where the market wants to go. As far as tomorrow, where's it going to go? Looks to me like this thing's set up to try and push to the top side. We'll see if it gets over that breakdown bar. That's the case. If that's true, I think that dollar pulls back in, and we probably get a weaker number tomorrow than we expect. And that's going to probably shoot everything that's been going down lately back up. And I'm talking about precious metals. Have yourself a great night. I'll see you next time. Good night.